So yeah, I think it won't be as big as people expect. That's what happened last time as well. It takes time. And the other thing we know about Trump, which is really interesting for 2026, um, is they're going to go all out to not lose the midterms, unlike probably any party we've ever seen, because we've got all these tech accelerationists in power, and they need um, the Congress and the Senate. So they're going to bribe the voters in every way possible to show victories. So it's very interesting. I think 2026 may be somewhat different than we expect. It's probably a down year, but probably a lot milder because they have to win the midterms.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Raoul Pal, founder and CEO of Real Vision, projects the imminent arrival of the much-anticipated altcoin season, a characteristic feature of each cryptocurrency bull market. In this phase, it is common for smaller altcoins to exhibit superior performance compared to Bitcoin and Ethereum, resulting in significant returns within a brief time frame. Recognized for his emphasis on high-potential altcoins, Pal views this time frame as a distinctive and profitable opportunity for investors prepared to navigate the associated risks. The cryptocurrency market is presently witnessing significant bullish momentum, as Bitcoin has reached several all-time highs in late 2024, trading above $997,000. Pal characterizes this phase of the bull cycle as the banana zone, a critical juncture where the opportunity for significant returns in altcoins is amplified. Nonetheless, this stage signifies a time of increased risk as market participants frequently adopt bold strategies to leverage the anticipated upswing. Pal forecasts a significant year for various cryptocurrencies in 2025, highlighting key altcoins and prominent meme coins that he outlined in his last update for 2024. These assets are positioned to yield significant returns as the market evolves and adoption increases. Pal's positive outlook is consistent with the perspectives of other esteemed analysts and investors in the cryptocurrency space, who interpret the present market conditions as indicative of substantial opportunities ahead. He highlights the importance of strategic methodologies, such as diversifying investments across high-potential assets, concentrating on fundamental analysis, and utilizing market trends to enhance returns. It is advisable for investors to achieve portfolio diversification by incorporating a combination of well-established cryptocurrencies such as Bitcoin and Ethereum, alongside promising altcoins that exhibit significant growth potential. This time frame offers a significant opportunity for long-term investors to leverage the transformative capabilities of digital assets, all while ensuring a well-balanced risk-reward ratio. And lots of things Raoul Pal discusses, so please watch the video to end and like, share this video, and subscribe our channel every day. Finance Thanks.
It normally decouples at this point in the cycle anyway, because it starts forward looking. Now, liquidity is actually financial conditions drive liquidity. And so crypto has been following financial conditions. So it suggests that liquidity comes back. So, but then in the full bull market phase, it normally does decouple. So I don't think it's doing anything unusual whatsoever. And, we're now a $3 trillion asset. You need more institutions in to drive the asset higher anyway. People forget that. Like the institutions here, it's amazing. Well, it has to be if you want 100% rise. You need larger pools of capital now because it's a much bigger market. So, and over time, I think, yes, we get product market fit. I don't think AI is the product market fit currently. I think that's all narrative based versus the reality of where it is. But look, overall, the trends are all right. And we haven't even got the bloody administration in yet. We haven't got the clarity that we're all waiting for. And everyone's at kind of a max fear right now. It's crazy. But that's a good setup, right? It's just a good setup for the year. Inflation is the discounting mechanism, not rates.
Exactly. That's exactly, yeah. Exactly,
and so the other thing that's interesting about this cycle is the best indicator for almost everything in the world is the ISM survey, the business cycle. The ISM is still not above 50.
Yeah.
And, back in 2017, it had come 50, but by about Feb, March, it really started accelerating. So we haven't even had a business cycle yet. Now, what's interesting is the best indicator of when you should be looking for a top in crypto is when the ISM is peaking, because that's when liquidity starts changing. Now, that happened really early in 2021 because of the pandemic. So it happened in March 2021. 2017 didn't happen until the end of the year. I think because ISM has been so low this year, there's a chance that this thing doesn't peak until Q1 2026. So it's a slightly different cycle, but we're just not even in the ballpark of looking for the China game here is really clear. They cannot stimulate because the dollar is too strong and they'll break the lower bound of the yuan. Right? They just can't do it. It's exactly what happened back in 2017. What they need is the US to weaken the dollar, then they can stimulate. They know it. Everybody knows it. Yellen knows it. Scott Bessent will know it. That is the game. And the game is we will not give this to you until you agree tariffs. And then they'll give it to them. And that's exactly what Trump did last time. So really, they will stimulate massively. They have to. They've got full-blown debt deflation going on.
On January 8th, Bitcoin's price saw a significant downturn, dropping below $96,000 and resulting in a loss of more than $5,000 in value in just one day. The notable decline was largely influenced by disappointing U.S. macroeconomic indicators, such as the lackluster ISM PMI and JOLTS job openings reports, which unsettled risk asset markets. The increased selling pressure was apparent, as Binance reported a peak in hourly net taker volume of $325 million in 2025 amidst the market turbulence. Bitcoin is presently evaluating the $95,000 support level, deemed essential by experts for a potential short-term rebound. The levels of $92,000 and $88,000 are being identified as possible downside targets. Despite ongoing concerns regarding a potential deeper correction, a degree of optimism is still evident among certain analysts. For example, Johnny anticipates a potential decline to $88,000, driven by macroeconomic conditions and political developments, including the inauguration of U.S. President-elect Donald Trump. Josh Rager emphasizes historical trends of swift recoveries within comparable trading ranges, indicating a potential rebound by the weekend should Bitcoin maintain its existing support levels. The analysis of on-chain metrics indicates a more favorable perspective. CryptoQuant CEO Ki-Young Ju indicates that the rising trend of long-term Bitcoin holdings compared to newly mined coins reflects robust underlying demand. This indicator of apparent demand demonstrates strong investor confidence, despite the prevailing market volatility. A significant decrease in sell-side pressure from exchanges could serve as a protective factor against additional declines, establishing an environment conducive to a possible reversal. The recent market dip may present a strategic entry point for investors, particularly if the $95,000 mark maintains its role as a support level. Implementing dollar-cost averaging strategies could potentially reduce exposure to risks amid persistent market volatility. Conservative investors may want to evaluate the implementation of hedging strategies or the establishment of stop-loss orders to mitigate risk associated with a potential decline to $88,000 or below. Recent trends indicate a resurgence of institutional engagement with Bitcoin, as reflected in declining exchange reserves and significant capital inflows into Bitcoin ETFs, pointing to a sustained positive outlook for the long term. Despite the current macroeconomic uncertainties and geopolitical events impacting the near-term outlook, Bitcoin's underlying fundamentals, characterized by growing adoption and reduced sell-side pressure, suggest a degree of resilience. A continued recovery, above $97,000 may re-establish bullish momentum, positioning the market for additional gains. Nonetheless, a decline beneath $95,000 may exacerbate negative sentiment, positioning $88,000 as the subsequent pivotal level for the market. It is recommended that investors pay close attention to critical support levels and macroeconomic trends, while adopting a balanced strategy to take advantage of potential opportunities in the face of increased volatility. Let's back to the Raoul Pal interview.
The strengthening the yen. Once they strengthen the yen, that injects liquidity into the system. The largest part of the euro-dollar market is the Japanese banks. So you need to give Japanese banks liquidity and they'll recycle it into China because they don't often like to give the Chinese direct swap lines. So whatever the mechanism is, the European banks and the South Koreans are also involved in the euro-dollar market, but it's really the Japanese. So usually you get the signal from Japan first that they start to say, we've had enough of the currency being this strong, or this weak, and then it starts happening.
Which we did see a little bit of last year, right?
Exactly.
That's right. That's right.
So, and the market did have a little bit of a freak out when that happened last time. So maybe around about the time that does happen, we will see another. We will see another freak out. Do you think, away from crypto, there is still this concept of the banana zone too? Do you think macro might also decouple from crypto here a little bit though?
No, I think the business cycle is still not above 50. It will go above 50. That means corporate earnings go up, and then we get rid of that bifurcation between the tech stocks, which are cash flow driven, zero debt, and the regular economy. That gap closes because earnings grow. Earnings grow, household earnings grow. Household earnings grow, investment goes into markets. So that virtuous cycle is all the same cycle across all assets. The next phase of this, we will see the cyclical plays, the commodity plays, all starting to rally as the global economy starts to recover. So that's all to come. The ISM is still below 50.
Okay, so that would be a change from just the Magnificent Seven just dominating the stock market to everyone else. Obviously, that's been one of the main hallmarks of this current rally. So you're still predicting a very strong 2025 then for all risk assets.
Yes, I am. I don't see anything that changes that, because stimulus has to be on the cards for, Europe's pretty bad.
Yeah.
The UK is not in great shape. And, we could see yield curve control in some of these countries, particularly the UK, for example.
The UK is freaking out right now.
Yeah, it's got a real problem. There's not enough liquidity in the system, which is why the bond markets are decoupling from forward-looking inflation expectations, because there's all the supply of the 4-year cycle of refinancing the debts, not enough liquidity to manage it. The other big change that happens, I think Basel IV comes into play, not in the UK yet, but in Europe first. And Basel IV, as ever, is just another backhanded mechanism for the banks to be forced to own more bonds. The UK and the US come at the middle of the year. So there's a big demand from bonds that come from this structural change as well, which helps add liquidity into the system.
Ethereum appears to be on track for a notable upward movement in 2025, with forecasts indicating a potential price target of $122,000, representing a 27% appreciation from its present value. Dr. Sen Dawson, head of research at Deribit, credits this positive outlook to a blend of technological progress, favorable regulatory developments, and rising adoption rates. The Petra upgrade, anticipated in the first quarter of 2025, is projected to substantially improve the efficiency and scalability of the Ethereum network. This enhancement has the potential to facilitate wider acceptance of real-world assets and enhance Ethereum's functionality in burgeoning sectors like decentralized physical infrastructure networks, DeepIn, and artificial intelligence applications. The upgrade is likely to enhance the expansion of Layer 2 solutions such as Base, which are currently experiencing increased momentum in these areas. The policies of the Trump administration are creating a conducive atmosphere for the advancement and integration of blockchain technology in the United States. This may result in enhanced regulatory frameworks, promoting institutional investment, and expediting the integration of Ethereum-based technologies. The increasing interest in Ethereum-based exchange-traded funds ETFs is drawing significant institutional investment. The financial instruments in question provide a structured and approachable means for investors to engage with Ethereum, reinforcing its position as a prominent asset within the cryptocurrency market. Data from platforms such as Deribit reveals a 250% increase in the volume of call options relative to puts, suggesting a robust bullish sentiment among investors. This trend indicates an increasing optimism regarding Ethereum's capacity to generate significant returns. The current outlook appears favorable. However, Ethereum's trajectory is contingent upon multiple variables, such as ongoing institutional engagement, competitive pressures from alternative blockchains such as Solana and Avalanche, and overarching macroeconomic factors. It is essential for investors to closely observe the advancements related to the Petra upgrade, any regulatory changes, and the trends within the options market to pinpoint potential strategic opportunities. The projection for Ethereum to attain $122,000 by 2025 is underpinned by a strong combination of technological advancements, positive regulatory environments, and increasing participation from institutional investors. Despite existing risks, Ethereum's significant position within the blockchain ecosystem suggests a favorable outlook for sustained growth in the long term. Individuals willing to embrace higher levels of risk might explore tactical entry opportunities, whereas more cautious investors could prefer dollar-cost averaging or hedging techniques to manage fluctuations in the market efficiently. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.